Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to give you an update from the Bank of England. You see, they're doing the rounds. Andrew Bailey is doing interviews, and these are really important because the Bank of England, while they won't come out and say, look, we're going to cut rates at this point, they do hint and imply on where they're going to go, which they did do in the interview that Andrew Bailey had this week. So in this video, I'm going to talk about what the implications are, what they're suggesting might happen, when might they cut, what are the markets thinking, they've updated their data as well, and much, much more. Now, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit that bell notification. We're on the way to 44,000 subscribers. And by subscribing, you'll get all the latest house price news, interest rate news, property news, and we talk about investing as well. So we'll give you all the best tips if you're a landlord or wanting to start property investing yourself. Also, let's get some views on this video. Simple, by smashing like, tickling like, doing something to that like button. That helps with the YouTube algorithm, and that really has helped the channel grow. So thank you to everybody that does that. So what's going on? Well, maybe we might get lucky. Last year in August, I was in France. You may have seen the video with my little girl, Amelie, when the Bank of England did their first rate cut. Well, the next Bank of England meeting is on the 7th of August, and I'm also in the south of France. So maybe that's a sign that I should go to the south of France more if we get another rate cut there. So fingers crossed. Maybe that's what it takes, me being in France, for interest rates to come down. So anyway, Andrew Bailey, he was at the House of Lords this week, and he was with the Economic Affairs Committee, basically giving an update on what they feel is happening in the economy. And as I said, while they won't come out and say we're going to cut interest rates, he did say interest rates are going to be in a downward momentum now. A slow, his exact words are, a slow, gradual decline. And that's what we want. We want interest rates to move in that direction. Now, if you're a saver, it's not great, but there are more people impacted by higher mortgages, higher credit cards, higher car costs if you purchase a car. And so there's more people that would benefit by lower interest rates. Also, we want to get this economy going. It feels like it's been so long that we've had a stagnant economy. We've had the pandemic, then we've had inflation, and now we're on the verge of a recession. And so, yeah, Andrew Bailey is saying rates are going down. That's good that he's keeping up that stance. Nothing has changed his mind, and that's what we want to hear. Other members of the Bank of England also are doing interviews, and they are saying the same stuff. So that's what we want to see here. So the next meeting is in August on the 7th. Hopefully, I'll be doing that update with a beer for you guys so I can let you know if the rates went down. That's what we did last year, and hopefully we'll do the same this year. That could be an annual tradition, I hope. Now, what else did Andrew Bailey say? Well, he said interest rates at the moment are restrictive. That's good that he thinks that. So basically, he means at the level that they're at, they are slowing people down. They're stopping some spending. And that's good that he feels that that rate is at that level. So he understands at some point he's going to have to make that unrestrictive and turn that off to get things going again. He also talked about jobs. He went into a fair bit of detail about the jobs market, and that is where they're focused on a lot now. The jobs market is softening. The outlook, the big companies that are being asked, are you expecting to hire for the rest of this year? A lot of them are coming back saying no. You've also got big companies, Klarna, they've got offices all around the world, but they're saying that they're replacing a lot of their staff now with AI, which is crazy. And so that is something that you could see a lot. In fact, I actually run a marketing agency, and yesterday I was in London with a lot of business owners, and we were playing with these AI chatbots. Basically, you know, like you get the live chat on a site. Normally that would be a human that would reply. Now you can get these AI chatbots that are absolutely insane, and they only cost like £100. And with those, you can deal with a lot of customer service issues and stuff like that. And that sort of thing is going to mean less people are needed to do certain jobs. That's just a fact of life. I was reading an article in the paper yesterday as well, where a lot of fast food chains are now getting AI built into the tills. And so they're offering people better products. You know, you've had the McDonald's things for years, but they're now getting artificial intelligence input into those. So when you put in your points card and it knows it's you, it will adapt a lot better to focus on what you would want. Also, it's looking at things like the weather and all these kind of things, which is crazy. And also, you've got drive-thrus that are taking orders with AI voices now. Popeyes is an American restaurant that's starting to do that in the UK. So rather, if you've been through a McDonald's drive-thru, right, you tell them what you want, you drive to the next window and you get the food. Well, Popeyes is doing that with artificial intelligence voices now. So that's going to stop a lot of employment in those places. And that is something that the Bank of England is concerned about, a softening of the job market. We've talked about this recently. The Bank of England now is not just focused on inflation. They're focusing on inflation, they're focusing on the jobs market, and also the tariffs. And that's another thing that he was talking about this week as well, is this tariff stuff is not good. It's not good for anybody. And this means that economies are slowing down significantly. America put out their figures this week, and people are buying less products from America at the moment. So Donald Trump wanted to stop these trade surpluses, but he's made it worse. They're actually worse at the moment. If you look at the data, whether you like the guy or not, his goal was to get rid of trade surpluses, and he's made the surpluses worse. They're bigger, 11% bigger, I think it was, than last month, because less companies are buying stuff from America because it's too complicated with all the tariffs and what's going on at the moment. And so they're buying from other places. If they can get it from other places, they will. So the Bank of England is taking all of this into consideration, but made it very, very clear the primary focus now has moved away from inflation and is jobs. And the jobs market is expected to get worse in the UK. And that is why they're saying we are likely to keep cutting rates this year. So if you want interest rates to go down, that's your good news. If you want to get more savings, interest, that's not great news for those types of people. But I guess being a property channel, more of you will be happier with rates moving down. Another thing that I saw in the news this week is that Donald Trump is likely to choose the replacement of the Federal Reserve maybe by September or October this year. They won't start till May next year, but that could put some more pressure on Jerome Powell maybe to quit early, or to maybe start cutting rates a little faster as well. And their job market is also softening, and that is a consideration that they're keeping an eye on. Let me know, do you think interest rates are going to drop on August the 7th? Is it an omen that I'm going to be in France? I hope so. Do make sure you comment on all the videos, even if it's just to say hi. Do smash like and subscribe, and check out all the other content as well on the channel, including this video right here.